stay checked out. Um, I'll pull it up, but if you guys got sneak peeks, tell me, should we be excited? I think everything's going. Oh yeah, it's looking quite green.
Yeah, it's a bit choppy, I
Let's
think.
Yeah.
Yeah, let's see the heat map. Yeah, and is it a weekly heat map that we show? I actually don't really know.
is
It is?
performance
Okay.
week. Yeah,
Is Polyhedra still up there?
we got performance.
Yeah, I mean it must.
Wait,
Is it still up there? I don't know. Yeah, it must be going by like volume traded. Then if it has it has things like Doge, Pudgy, like Pengu. There's like very high volume tokens. Yeah, Sahara AI.
BNB,
Um,
star of the show.
Yeah, new all-time high for BNB and XRP as well.
XRP is looking good. XRP is
yeah.
looking very good.
Yeah, it's paying for the .ETH still. XRP and BNB hitting all-time highs for Ethereum. It's if someone had told you that like 2-3 years ago, you would have laughed at them.
Oh my, yeah. You would have been laughed out of the room. And now, I mean, look at it. It's incredible, really. I mean, I think we're just seeing, truly a lot of rotation right now, right? We obviously had like the big run up the Bitcoin ETFs, cooled off a little bit. It's not looking like I think we're going to see a bearish trend, obviously, by any means on the Bitcoin ETFs, but we are seeing a little bit of naturally rotation, right, to some of the smaller cap coins, right?
Yeah, and I mean, even without necessarily seeing like actual rotation between them, I mean, just by virtue of it being a much larger asset, like it's going to be much less sensitive to those flows, right?
Yep.
Yeah, you have the Solana ETF as well, the Rex Osprey staking ETF. So I think I'm definitely excited to see like which new ones come onto the market, and then if it kind of like dilutes the Bitcoin ETFs just a little bit. I mean, they're pretty well established at this point. So if we have Solana ETFs, if we have a Pengu ETF, like is that overlapping with the same audience that's investing in the Bitcoin ones? I would lean towards no, but I think we'll just have to wait and see.
Yeah, it might be a little bit of a different audience, I'd say.
For sure.
Yeah.
Well, I don't know. I think Bitcoin and ETH now it might be more aligned.
Yes.
But I mean, I can definitely see like Solana. I'm not really sure like what the demographic is for that ETF. I mean, well, right now it seems like it's just none. Like, I mean, it's not really getting many inflows, but I think in due time.
I think it just takes time. I think I read a stat recently, and in this month alone, the ETH ETF has had more flows than it did from like the first year of launch. So it's crazy. And then the Bitcoin ETF, it broke all records for the fastest, I think, to 10 billion, or it really is just a straight up line. So obviously the appetite was there, and maybe Ethereum to some of these like larger investors was a bit like that indie band, the indie band, it's sort of coming through. People aren't really into them yet, but then a year later, everyone's into them. And then you're like, you see, I told you the music was good. Maybe it's kind of like that effect for Ethereum.
I like them from day one.
A little bit.
Yeah, you weren't there, man. You wouldn't know it.
Day one. All right, we're front running the show a little bit because we're gonna get into it. Ethereum's ETF, all that good stuff. Let me welcome everyone to the show first. Welcome to a new Market Cap episode. Market Cap is where funds and firms provide their insight on the latest market developments to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. And with me, I have Daniel, our Research BD lead, and Darren, Analyst and Panel Contributor. And we're joined by Jordan Parkinson, Senior Account Executive at Everstake. Welcome, Jordan, to the show. Nice to have you with us. Please give us a brief introduction on yourself, but also very much Everstake.
Absolutely. Yep. I appreciate everybody having me on the show. I've been a fan for a little while as soon as I heard about it. So this is a little surreal that I'm able to join.
Wow.
Oh,
We
Yeah.
haven't heard this before.
fan
Yeah.
out, fan out.
So,
Yeah, so I'll give you a brief intro to myself, and then we'll talk about Everstake real quick. So, account executive based out of New York City. I've been in crypto for the past couple of years. Prior to this, I was at some other institutions within the space. But my background is primarily software as a service, right? So I was selling cybersecurity products for a number of years to some of the largest institutions throughout the US and Europe. Had a great time, but I got the crypto bug, as we all do. So as soon as I was, at my first conference, I was just immediately, I knew I was like, this is it. This is it. Like the speed at which the industry changes, the speed at which new products are brought to market is unparalleled. It's at, I would say, like an order of magnitude to the nearest, call it like Web 2 or whatever. There's nothing even close. So I've been really enjoying my time since I've been here. I've been really enjoying my time since I've been at Everstake. And it's been going really, really well so far. So in terms of who Everstake is, we're one of the largest staking service providers in the space. So essentially what we do is we operate validator infrastructure. We support over 100 different proof of stake networks. So all the big hitters, ETH, Solana, Cosmos, Near, you name it, we are supporting those networks today. And we're trusted by both the retail audience and large institutions, right? So we work directly with both, as well as, on the protocol side of things. So me in the US, I'm primarily working with funds, custodians, exchanges, other platforms that want to integrate staking or expand different yield offerings. And they want to grow AUM, right, potentially, and recurring revenue, but they don't want the technical or operational risk. So that's kind of where we come into play, right? We give them like a plug and play, secure, battle-tested infrastructure. We'll even help them with launching, new products that are white labeled, if that is what they're looking for, if that's the best fit for them. And their users as well as themselves are able to earn yield on these idle sitting assets, right? So if you're a huge ETH believer and you're going to hold ETH for the next couple of years, why not earn a substantial return on that ETH rather than just going cold storage? So that's always our angle, and it's been fantastic working here so far.
that's a great overview. That makes a lot of sense. I was wondering about those clients a little bit before the show. Me and Darren were actually chatting before you had the opportunity come on.
Yep.
And like some of these ecosystems, for example, like Cosmos or stuff like that, like sometimes you do wonder, okay, like who is still staking there?
Yeah, I know. There's a substantial amount of our clients that are still holding within some systems like Cosmos systems, right? The ecosystem is still strong. We see it as something that, we're not really seeing a lot of clients run away from, right? Obviously, there's going to be, peaks and valleys of every ecosystem that you support. That's just, I think that comes with the territory. But overall, right, we're still seeing a substantial amount of holding taking place, right, which is good for us, because obviously if we're running the validators and there's not, a good amount of TVL on these, in the network, it's not a profitable endeavor for us, right? So we want to make sure that we obviously have a healthy amount of TVL spread across any network that we're supporting. Otherwise, it could be a net loss for us. But no, at this time, I don't think we're too concerned. I think it's just kind of how we're seeing, the market kind of peak and valley right now.
Lovely. And a bit more about the clients. I'm just curious. Is there like a typical profile you would say? Because I can imagine that, staking is not super high risk. So it's not like the hedge funds who are coming to you, I imagine. But there are guys who, it's a certain specific appetite for a certain level of risk. I can imagine, but I'm just thinking out loud here and pondering. Please.
Well, I never want to pigeonhole the clients that we can work with.
That's fair.
We work with everybody.
Okay.
But if you're looking for, I guess, like the ideal profile, it would be someone who is looking for good, healthy returns, who has a substantial amount of assets in proof of stake, and wants to maybe introduce a different strategy, right, to their overall, strategy, whatever that might be, right? So they might allocate 25% or 30% towards staking their products, and then maybe the rest of it, they might be doing more liquid strategy, so on and so forth, right? Arbitrage. There's a multitude of different strategies that we come across, but I'd say the good, whether it be custodians, wallets, obviously, they're always going to have those assets sitting on their platforms. So, it makes perfect sense to have staking integration for them. That's probably the easiest route. VCs, I think it depends on where the rally is, right? So if you look back to like December or November of last year, right before Bitcoin hit that new all-time high and the market was hot, super hot, we were seeing a tremendous amount of staking take place on all the coins that were rallying alongside it, right? So I think when Bitcoin goes up, typically we will see a lot of those smaller altcoin protocols go up as well, right? And a rising tide raises all ships, typically. So in that specific instance, we were seeing a lot of staking take place in these kind of more blue chip proof of stake projects, right, where they were going to hold at least for the next couple of months. They wanted to earn that stake, and then obviously when we see kind of more of a valley, then we see them rotating into other projects or unstaking and switching their position to something else. So but yeah, I would say like we're going after those custodians, those wallets, VCs that hold large positions in a lot of these coins, protocols as well, right, that are staking their own foundation stake. And they're members from their cap table, right, that have locked tokens anyways. They need to stake it, right? Otherwise, they're losing money to inflation. So on and so forth. But we also are seeing a big influx of fintech from the TradFi world moving into this as well. So think, buy now, pay later, or credit cards, neobanks, right, that are enabling people to spend money and have access to banking much easier than before. They're stepping into the crypto world as well. And what's a more easy to understand product than staking, because I relate it to almost like a high yield savings account in some places, in some ways, right? So it's a very non-custodial, safe way to earn APR on their assets.
Yeah, for sure. And like you painted a picture, right? It's a relatively close analogy to the traditional world. So it's a product that people can understand when they're first coming into this space.
Yes, absolutely. Yeah, and I think we're seeing that as for those that come from the TradFi world, you want to start with like the baby steps, right? You don't want to just jump right into the deep end of restaking and meme coins and stuff. So it's easier to kind of start them small, and then we'll kind of see that progression in exponential path generally.
Right. You mentioned assets being held up by the fintechs. Like, what kind of assets are these guys holding? Like, are they holding like a bag of Solana? Are they like? I guess why are they actually holding these assets in the first place?
Yeah, it'll typically be like the ones where we're seeing like ETF and ETP action, right? So the most trusted ones. So Bitcoin, Solana, ETH, right, for the most part right now. But obviously, with all things, that'll probably expand to the top 10, right? But primarily, it'll be like those top 3.
They love a yield. The staking yields you see in Solana and Ethereum, they're not so high that people get afraid it's a complete Ponzi scheme.
Right.
But then obviously it's not so low that it's some savings account, it's like 0.1% interest that you're making. And I think what will be interesting to see is if network activity really does start to pick up again.
Yeah. How
the environment changes as you see the ETH staking yields go from say 3.5-4% up to close to 10%. That's something I've been really interested to see for a while. But again, gas fees are still quite low. Yes. No one's busting their wallet paying high gas fees yet. Will it come? Maybe people will complain when it happens again, but people hold out for it. I think it might come.
Yeah. I think we like to relate Sol as like Goldilocks, right? Where it's It's not too low, it's not too high, right? It's kind of just right for a lot of the investors that are looking for really, generous returns to engage with SOL staking, right? Sometimes with other assets, right, the return is not high enough, and they're like, well, if I'm going to do that and have an unbonding period and all that stuff, I might as well go a different route, right? It's not exciting enough sometimes for them. But with SOL, I think we find the right fit for a lot of people.
What is the rate for SOL as of right now?
The APR.
Yeah.
Is it like 6 and change or something? Like that?
Okay.
I'm going to guess it's between 5 and 6%.
Yeah. It's about right.
Something exciting as well. You guys posted about it, or depends how you look at it. So you guys posted about this. When I say you guys, I mean Everstake. So what we're seeing is close to 2 billion in ETH in the validator exit queue. Maybe a bit sensationalist title, but because I read the thread and unpacked it a little bit, but maybe you can enlighten us, like what's going on. Is this a mass exodus from ETH or what's the story?
So I think it's easy to jump to conclusions sometimes and think that that's what's happening. And oh my gosh, when was the last ETH scare? Like what, a few months ago? Everyone was like, ETH is gone and so on and so forth. But really what's happening right now, it's basically strategic reshuffling, right? So validators are exiting so they can restake elsewhere, rotate through their operators, or take advantage of new setups like other strategies, restaking, different MEV strategies, so on and so forth. And also like locking in profits, right? When ETH has a run up like it just currently has, a lot of the VC players, are not tied to it. So they will take profits. And as a mentor of mine always told me, always take profits, right? Never, lock in.
ATP.
Yeah. You have to pay yourself. So I think that's what we're seeing happening right now. There's gonna be some short-term sale pressure, when the ETH hits the open market, but I think we're gonna be just fine, right? So that's what we think is happening right now.
Okay. All right. No mass scare. We don't have to be afraid yet.
No.
People always need some hysteria in this market, though.
I mean, how else are you gonna, get those short calls and you gotta. I think we see it happen a lot.
Definitely, people need reason to get fired up over. It's like you always hear people in the market say, "What was the reason we moved up or down today?"
Yeah.
And like sometimes you can reply to them and say, "Well, what if there was no reason? Why does there always have to be a reason to every minuscule price movement up or down?" Some days you wake up and the sun's there. Some days you wake up and it's raining. Markets can be entirely more stochastic in nature than what people realize. But due to information availability through the internet, there's so many different facets that you can give reason to as to why the market. Like if this happens and ETH ends up hitting all-time highs in the next 2-3 weeks, a month, what are people going to say? Oh, it's because the unstaking was happening. That's why the market went to new all-time highs. Whereas sometimes it's just a bit more random than what you think.
Yeah, I definitely think. Yeah. I mean, a lot of these on-chain things, these big movements, is like it's like an exchange, like moving things around, or like internal wallets and stuff. It's like a lot of this kind of stuff that maybe isn't like associated with I mean, everyone's just scared of like sell pressure, basically, right? Like that's what they're like, freaking out, like, I think that was just out that one today, right? Like the large Bitcoin wallet as well. That one's been like just random, like sporadically just moving, transferring between wallets like every couple of weeks. I think starting on July 4th, it was like $8 billion. And then I don't think any of it actually ended up making its way to any exchanges, right? And then the rest is history. BTC over 120K shortly after. So I don't know. I think a lot of these things are like yeah, it's like don't dig too much into it. You know what I mean?
You can fudge yourself. You can literally fudge
Yeah.
yourself out of your own bags in this phase of the cycle that we're in. It's like it's so easy to do, especially in the summer. Unless you're like a hardcore perp trader and you like on it every day, you've got all these algorithms or like a whole system that you use, sure. But I think for a lot of people, just get away from school.
Yeah. I think the rule of thumb for me is I always look at what BlackRock and Fidelity are doing and other large institutions are doing, right? So as long as we're seeing healthy inflows there, I don't think we have much to worry about. So like there's billions in net inflows happening, in July. They're still buying, they're actively buying. So I think it's a sign of maturity. Validators are free to move around. The system's flexible. ETH is doing exactly what it's designed to do, right? So flexibility, people can move around. They're not, it's a healthy part of it. So I don't think we have anything to worry about.
Okay, but I think it's clear that they're not exiting per se, but there is probably a reason that you said it's more like a reshuffling.
Yeah.
But there's probably a good reason why this is a good time to reshuffle, or that they all think that.
Potentially. I'm not sure, right? I know that there's obviously like a ton of products that are happening in the ETH world, right? People are able to do new strategies to earn yield. Without saying too much, we're working on a couple interesting strategies ourselves. So yeah, I mean, I think that there's probably just a rotation, right? Once we've seen the run up that we've just seen, a lot of them are, myself personally, the way I go about it is once I see a run up and I've been able to take profits, I'm looking at the next possible area that has not run up yet, right? So yeah, I think we're just maybe seeing some of that happen right now, and maybe a little bit of changing of their strategy overall. But I think ETF, ETH itself, and the belief in ETH is not really going down at all, right? It's just more so people are finding new ways to get that return.
That's an interesting take. This run up might have shaken a lot of people like awake a little bit, and make them think, hey, actually maybe there's some more interesting things to do right here, and start positioning for what's to come. And as you said, the system is looking very healthy right now. We can see that from the inflows, and yeah, let's actually take a closer look at that as well. Like you said, looking very, very, very healthy indeed. So actually, ETH ETF saw over 2 billion in net inflows last week.
Mm-hmm.
That's actually almost a 2.5 times increase since the previous weekly record. Yeah, it's looking healthy. Why the acceleration?
Was that more than BTC? I'm actually I actually forgot how much BTC had last week.
It looks
but yeah,
like
I mean,
on the graph, but the numbers actually a little bit lower, but it's not far off.
Yeah.
But yeah, that's the cumulative. Just to clarify the white line. But yeah, I mean, like just a few months ago, yeah, that definitely would not have been in the cards for like ETH to have greater net inflows than BTC in any given week. So yeah, I mean, a couple big days. You had that 700 million day. I mean, it's like doubling the previous record for inflows. So something like that happens, you gotta kind of take a look. Like, oh, okay. So people are paying attention, and yeah, like some people that are not, crypto natives to, or probably to our degree, are interested in ETH for whatever reason. Like they're not interested in it for the like crypto Twitter reasons. So it's like kind of interesting to think about. Like, okay, well, actually, like why are they buying this thing? Is it just a silver to BTC's gold? And then if that's true, like why isn't Solana to the mind of like a normie? I guess it's like I'm always just curious to know like how they see ETH, Solana, XRP, like all these things, right? They have kind of like a different value, not value system, but yeah, they kind of like prioritize things a little bit differently. A lot of people, even like very smart people, yeah, they're really big on XRP, which I think is really interesting. And yeah, so I think it like I think it can make like crypto natives kind of scratch their heads a little bit sometimes to see stuff like this. And I think we'll see a little bit more of it as we have more of these products trading around off chain.
Yeah, I have that same question because typically I used to think that, okay, ETFs, these are people that can't get exposure on chain. So what? That's like traditional finance institutions. That was kind of my rationale, right? But then, like you guys mentioned at the start of the show, Bingu ETF. Like what TradFi institutions are buying that? So okay, so actually it is making,
well, maybe Van. I mean, they rung the bell
Maybe
with
Van
Van Eck, right? So I don't know, maybe Van
maybe
Eck.
it was Matt.
Maybe, but I mean, yeah. At the end of the day, it's like they're facilitating, right? What they think there will be like retail demand for, or maybe not even necessarily retail, but yeah, like just some demand that can kind of warrant them putting this ETF or this product out there. So, I mean, I think Pango is a really interesting one. I think that's like one of the few, like when you talk about meme coins, yeah, it's like an attention game, right? I think Pango is like the only one that can kind of sustain the attention like organically. Like they have toys, like they're in the world, right? Regardless of whether their token is doing good or doing horribly, like they're very visible online in real life. So I think that's a pretty interesting one. I don't think there's like an equivalent like it. I mean, in the past you had like XRP, like IRL ads, like for XRP and stuff. Like I guess Pulse, that's kind of like another weird one where people are getting like letters in the mail. It was like an advertisement in the mail, like I don't know, shilling Pulse, Pulse chain. Yeah. But yeah, it's just interesting to think about.
Yeah.
But
yeah, Hex.
Okay. Even
yeah, Hex.
Okay.
I mean, a lot of it, I think, is a basis trade. People are buying the ETF and then they're shorting the asset and futures and basically claiming like almost like a delta neutral style trade where they might be taking 10 to 20% a year just off that. And, as crypto natives, you spend enough time in crypto, your risk tolerance compared to a lot of normal people, it's just like completely crazy. But depending on how much you started with in crypto, like obviously if you started with a lot more money, then you probably could just be happy buying the majors. But like for some of the degens out there who literally started with like a few $1,000s and grew their portfolio massively, that was done taking huge risks. So in the mind of a degen, a basis trade, what the hell is a basis trade? Like, why would I do that? The returns
why
are so
bother?
bad.
Yeah.
But hundreds of millions taking 10 to 20%
That's
for
great.
these funds or these other institutions, that's something which people in the past were doing with other financial products. Before inflation came, you had the 60-40 portfolio, which was like the bedrock of everything. But then inflation came, bonds went to the shitter, and now there's a new sort of trade that people need to take on in size to try and take some of that. I'm not going to say risk-free yield because it's crypto, but some of that sweet, juicy yield of some sort.
Yeah, I mean, funding rates aren't that high either, I don't think, last time I checked. So yeah, it's like nothing crazy. I mean, it seems like, yeah, like even after consolidating, BTC just like stays, within like 3% of all-time highs, kind of, yeah, still hanging up near all-time highs. ETH obviously, yeah, it has yet to reach new all-time highs. So I mean, it seems like semi-sustainable to me. Like I don't see like signs of, like insane froth anywhere yet. So I guess that's always good.
Yeah. And I think just around ETH, right, we're seeing a big focus on ETH right now just because it's such a core part of the infrastructure within the space, right? Like you have staking, DeFi, restaking, tokenization, stablecoins, all of that, right? ETH is the backbone for a ton of it. So people are realizing just the power of ETH specifically, and it's being able, like, there's strategies they can do upon that, right? You can program different yield generating products off of ETH. So sidebar there, like one of the products that we're working on right now at Everstake is something that's in cooperation with Lido V3. their Lido V3 product. So it's going to be like an ST ETH vault, and we're able to generate returns of like 7.8, 7.9% APR, which is double what the current amount is if you're just vanilla staking, right? So there's all these interesting products that you can do and build on top of ETH while still maintaining a very safe staking structures. It's obviously has a high amount of liquidity, and it's very low risk for investors and institutions out there that are looking to get returns on their ETH that they're holding long term. So I think, there's I think an awakening on ETH. Bitcoin obviously has always been that, but I think we're seeing a lot of the investors that were scared off earlier coming back. They're coming back to their senses, and they're like, okay, wait, hold on, we might have jumped the gun a little bit here.
That makes a lot of sense, and that's interesting, and that's definitely corroborated by what we're seeing right here, right? So you kind of allude to it, like ETH DeFi is regaining dominance in TVL. So now approaching year-over-year highs and pushing aggregate TVL closer to its all-time high. Kind of in line with what you're saying, like you can actually do interesting stuff with within the ETH ecosystem, right?
The DeFi renaissance, it's coming.
Exactly.
So leading by a wide margin.
Yeah, very wide. I don't know if I see that going down anytime soon. I mean, ETH is like the home of like these more like capital intensive kind of strategies, like less volatile. Just less volatile flow on ETH, but there's a lot of money sitting there. Actually, I forget which of the big banks published this stat, but it was something. It might have been like JP Morgan that published a stat saying that like the average USDC, like the stablecoin, is 12 times its velocity is 12 times greater than like a normal US dollar, right? So I mean, that is pretty crazy, right? I think that it can move around 12 times more than a traditional dollar, but then you have that within chains as well. So ETH just kind of it's like that slow and steady money sits in Aave. I don't know what percent of the TVL is just sitting there in Aave. And then you have things like Athena. I mean, it's a pretty large capital pool. And then now you have some interesting things like Robinhood and tokenized equity and stuff, like more like net new issuance, right? So like you're siphoning, you're kind of like double counting a little bit, like taking stuff that already exists outside of crypto. It's counted in that like in the $56 trillion like U.S. stock market. But then we're also going to have a representation sitting on, it's not on Ethereum, but it's going to be on an Arbitrum L2. So you have that kind of stuff happening on Ethereum. Seems like it's happening on Solana too, right? But it seems like the one that gets all the attention is the one that happens on Ethereum, right? Because it's Robinhood, right? Like if we're going to hold up Robinhood and the one on Solana, X stocks, like guess which one people are actually going to care about. But so I think it's a good time. Like they already have so much sitting there on the chain, and they have like, for whatever reason, they have Robinhood and other large banks that are kind of like I don't know, they're bullish ETH, I guess.
Finally, they weren't for a long time, but now it seems like
they weren't bullish anything for a long time.
And pouring in.
Yeah.
I guess the change in SEC probably really opened things up as well. It really was a big shift. I mean, pre-election, we had all these different Operation Choke Point with the debanking going on. There was the DeFi broker rule that they wanted to bring in, that every DeFi offerer was also to be registered as a broker. So it was really terrible times. Like if you partook in DeFi summer of like 2019 or earlier through to 2021, of all the lending, the swapping, all these really cool apps that at the time everyone was like so convinced, we're going to be using this technology and the back end of all these different financial apps. You're going to be swapping your stocks for one another using Uniswap. But anyway, most of the things we thought would happen never actually happened. But what we see now with tokenization being pushed as a thing, I guess the irony is all it took was Big Daddy Larry Fink to come out and say that, we want to tokenize everything. And then all of a sudden you get the change in leadership in the land of the burgers. And then all of a sudden now, DeFi's like kind of cool and sexy again, like tokenization's a thing. And like we've gone from being, the sort of shunned away weirdos in the party, that meme of the guy in the corner at the party, like that's what DeFi was like. Whereas now it's like actually kind of cool again, I think.
Yeah. I think a lot of you're absolutely right. A lot of that has to do with the fact that builders are being allowed to build again, right? Without fear of things happening to them from the SEC or other regulatory bodies. So when you have kind of the freedom within the market to build and experiment and try new things, we're going to see not only new products come to market, but we're going to see the inflows start going back, right, to these products that everyone found interesting and everyone was believing in, right? And then we saw a little bit of like a little bit of a scare happen, right, in the beginning. So yeah, I'm with you on that.
Maybe you guys have seen that firsthand because you mentioned you're developing new products and bringing it to market soon. Maybe you guys will also, I don't know, I'm purely speculating here, but maybe you guys were earlier sitting a little bit on the sideline thinking this is not the right moment.
Yeah.
Are you speaking from firsthand experience here a little bit as well?
Yeah, absolutely. So like I said, we have the STETH vault product, which we've been working on. But again, we were holding back for just clarity on the regulatory side of things. And then now I think we're in a really good space in the market where we feel bullish bringing this to market. It's going to be revolutionary, right? 100% non-custodial, fully compliant, right? And all the great institutions that we work with today are still going to be able to use this product, but also get much better returns, much juicier returns. In conjunction with that, we're also working on something on the stablecoin side of things. So I don't want to jump ahead here, but I was at Circle's HQ and I was sitting in the room with Jeremy, Alea, and about 70 other people when the announcement came through on the Genius Act passing.
Nice.
You can imagine the level of excitement and high fives going around during that. It was a great moment, and I think it's confirming for us and our team that this is like a pivotal moment for stablecoins in the U.S. Right, so it's drawing like a hard line. It drew a hard line between what's considered professional grade issuance versus what everything else. Right, so now for us, the builders that want to be able to build really cool integrated products. It gives us a green light, right, to feel much more safe about doing so, right? So we also have a stablecoin product that's coming out, which should achieve yields of 14 to 20%, and that's going to be obviously in conjunction with USDC and some other stablecoins that we're working with as well, right? So really cool products like that from us and from other issuers are going to be coming to market in the next couple of months. So we're bullish as you can be within this space.
You say 14 to 20%? Damn.
22%, actually.
22. Oh, okay.
Yeah.
Had to clarify. Okay.
Yeah. So, obviously very juicy returns for these organizations, these institutions that are holding stables, right? A lot of institutions are moving towards stables. We've seen it already happen. But I think, with the Genius Act coming across, we're going to see that, I don't want to say the exact number, but it's going to be very, very aggressive as far as the shift into holding stables because of the options that you can do and the amount of interesting products that can be built. So,
right, and I mean, yeah, I think the Genius Act in particular, because you get the Stable Act and then you have the Genius Act as well. So I think the Genius Act has that provision where like the actual issuer itself is not supposed to pass on the yield, right? So I guess that's exactly. Yeah, that kind of falls like right into your guys' lap. It's like, okay, you guys can't do it, so you got to go through us, exactly. Like the exchanges as well, and all these guys. But yeah, that definitely seems like a big catalyst. Like you guys would be, one of the firms like most primed to benefit from that kind of that specific part of the Genius Act. I mean, I definitely think. I'll be interested to see, I think this is like pretty good for, it's definitely good for Circle. Like, I don't know how much banks and like traditional, like the more traditional like dollar issuers, you could say,
Yeah.
are going to like pounce on this. I mean, because they can already like print money out of thin air, right? Like 10% reserve ratio, and
Yeah.
and now they got to go to like, oh, it has to be fully backed, right?
Yeah.
So it's like, I imagine that they'll be interested just because they have so much money to throw around. Like they can't afford to, like not invest in new stuff. But yeah, I think this is definitely good for Circle. I don't like, especially for US stuff. I definitely don't see Circle going away anytime soon. I thought it was interesting that you had the Tether guy as well. He's like playing nice with the administration also. So I guess can't count out Tether as well.
Yeah, yeah, and obviously on the TradFi side, J.P. Morgan, Citi, Bank of America, actually, they're all exploring like stablecoin issuance right now.
Right.
So,
Yeah.
it's crazy
An
times.
actual stable, yeah. Like I know J.P. Morgan was big on the deposit tokens for a while.
Yeah.
Like they're like, oh, we don't like stable coins lately. So, but now it's like, okay, we can do this more like what you would traditionally think of as a stable coin.
Yeah.
And yeah, so I definitely think it's pretty interesting. Bullish Circle for sure. Yeah, you have some USDC metrics up on the screen. Yeah, I mean, it's not like a crazy uptick in activity since, I mean, it makes sense. Like Circle IPO'd, like you wouldn't, like on paper, that shouldn't really impact like the on-chain metrics at all. I mean, a lot of USDC's volume is like, it's on exchanges, right? It's like being traded for Bitcoin and stuff like that. So there's a lot of ways that you can break down the volumes and the data for USDC. Yeah, but I mean, it remains like the go-to like stablecoin to use, especially for these US integrations, right? So it's like Coinbase, Shopify, like Stripe, all these guys. Yeah, like they're looking right past Tether and they're going right to USDC. So I know it was a pretty popular point to make. I mean, I've made the point on the show myself of like of how dominant Tether is. But yeah, especially for like the news headlines that you have now, like Genius Act and even these other like like fintechs adopting stablecoins, like it's all bullish.
Yeah.
USDC and Circle specifically.
Why is Tether historically been a little bit more dominant than USDC?
I mean, they have a very like a boots on the ground approach. They had like Tron kind of doing a lot of the work for them as well, establishing themselves in these emerging markets, right? You have like, it's not an accident that you have like a bunch of dudes sending USDT like in South America on Tron. Like it happened for a reason, right? Like someone had to go and tell them to do it like this, and then all their friends have it. They have a Tron address. Like they're not going to switch to like Solana and USDC because no one else has it. So yeah, I mean, I don't think like globally, I don't think that Tether dominance is going to decline at all. But like for US stuff, and then I think for US stuff, I definitely think Circle has a big advantage, and it's the US stuff that's like has all the momentum, right? Like Genius Act, it's in the US, right? Like it doesn't apply outside of the US, so it can have implications obviously globally. But that's where all the momentum is right now, and I think Circle is definitely primed to capitalize on that. So we'll see how Tether counters. If they like, I mean, historically they just seem kind of like a little bit indifferent. They're like, okay, this is our thing. Like you guys have the US, we have like the whole world outside of the US. Basically, like it's fine. But yeah, I mean, Paolo, the CEO of Tether, said he wants to have a domestic, onshore presence with the USDT. So I think that'd be interesting to see. We'll see how, like, what kind of strings he can pull compared to like the big network that USDC has already built up.
They were earlier as well, I think. Tether was the first stable
Yeah.
before USDC, and I mean, I'm pretty sure the people who started Tether were the previous people who ran Bitfinex. So like these guys have been entrenched in the ecosystem for so long that like, I've never been one of these like Tether truthers and, you could make conspiracies for days about Tether, but obviously they were early in the game. They had an exchange, made a load of money, probably quickly realized that actually shit, because I'm back in the day, all altcoins were paired with Bitcoin. You know, that's why people reminisce so much about like the 2016 bull run, because you know, alt pairs and Bitcoin pairs, there was no USD pairs. You know, that's like the Pepperidge Farm remembers meme everyone you always see. And so like I guess that's probably why they've managed to stay so far ahead. Obviously, it's interesting because I think there's like 7 employees at Tether. I mean, it's a tiny company compared to like.
It's definitely, yeah. Like people always say that they have like, but they definitely have a lot of employees because they have like a very global presence. So I definitely I don't buy that it's like, oh, it's only 100 employees. Like,
Yeah,
it's the most profitable company per employee. Like I mean, it could still be like they have a lot of
It's all a bunch
revenue
of
room to operate
freelancers,
with,
just not on
but
the payroll.
maybe. But yeah,
Like
no
that.
matter how you count it, it's not like 50 dudes in Switzerland, like how people have been saying, like for sure.
Hey, yeah, Tether is doing great. USD is doing great. It's not only stable coins that's doing great. Actually, the whole market is experiencing a new high. Let's have a look at the shot because it's nice to see. We're back over 4 trillion total market cap.
Yeah.
Um,
Well, I think we
no,
might be back under now. Unfortunately, I don't know. I don't know. I didn't. Let me check real
we
quick.
will.
But
We
yeah,
will.
on the weekend, it was a nice surprise.
it's all right. What's a few 100 million amongst friends?
Right. Yeah, 3.93. I mean, yeah, pretty
but
high.
but
Um,
guys, do we think this is sort of like a new starting shot for a new rally? Is things are going to heat up more? Are people going to get bullish again? Is this sort of like a signal for more to come, or should we still be cautious?
Yeah. Well, I think historically, right, like all the other seasons, when Bitcoin market cap would fall underneath any sort of critical threshold or whatever, which it has not yet, the money would flow, right, from Bitcoin to ETH to the rest of the altcoin market. I do think that the market has changed since then. What indicators that I look at is like Bitcoin dominance and some other things, right? So it's usually once we start to see that Bitcoin dominance start to fall, it's going to flow to the rest of the market usually. But this cycle is a little bit different, right? We're seeing that Bitcoin dominance stay high, and when we think it's high already, it goes higher. So I think a lot of that could be from the ETFs and large institutions playing a role, and they see it as safe money or an a risk off asset. So it'll be a little bit different this time, but I do think eventually we will see that flow to other areas where they can see greater returns, right? So yeah, I mean, I think hopefully it'll happen sooner rather than later, but it's tough to say.
yeah, that Bitcoin dominance it was high. Now it's 2 weeks of it declining. So I thought it's interesting. Like you first had it start declining when BTC went above 120K. It was the other weekend. So I thought that was very telling. That you had BTC like just pushing up to 120K, past 120K like in the morning in Asia hours, and then simultaneously alt dominance pushing up, and then now it's down. BTC dominance is down like 10%, right, in just a few weeks. So but I definitely don't think it's like too frothy yet. I mean, you have ETH and you have like a bunch of Dino coins, basically, like XRP, Cardano, all this stuff that is responsible for so much of the alt's market cap. It's like it's those majors that probably most of us don't really care that much about, but a lot of people, who maybe don't listen to this pod, actually are interested in. Yeah, you can kind of call it like the doctor and dentist coins. Like they just have them sitting on exchanges. Like those coins are some like they're consistently XRP, ADA, all this stuff. Like they're consistently top pairs traded across all these exchanges. So I definitely think if you start to see like those coins kind of start to like fizzle out a little bit, then it's kind of like a sign that that segment of the market that I don't want to say like less sophisticated retail, but kind of like less sophisticated retail. They're just holding spot on exchanges. Like they're kind of they're tapped out a little bit for now.
I think what's interesting as well is that, Bitcoin dominance is like a metric. Typically, most on CT never cared for Bitcoin dominance, right? In the previous cycle, you could throw your money at anything at the right time and you would have made a load of money, right? And I almost feel like once CT as a collective starts to focus so heavily on some of these metrics, like originally it was inflation, right? When inflation kept coming in higher and the rates kept getting hiked, CT was crazy about it. They didn't know what to do. Like, oh my God, what the hell is this inflation? Once everyone on CT became a macro expert, suddenly interest rates didn't really matter as much for Bitcoin anymore. It still managed to carry on moving to a nice degree with interest rates relatively high. So I'm of the belief that CT never cared about Bitcoin dominance. Now CT cares so much about Bitcoin dominance. I think we finally get to see Bitcoin dominance steadily start to not roll over like we've seen before. But I think, it killed off enough of the believers who called for alt season every week or even every month for the last since 2023. They're all in the dust now. So maybe we're allowed to have alt season once the masses get cleared out.
Perhaps.
Yeah.
All right. Jordan, anything to add?
Yeah, I mean, like XRP, ADA, some of the other like larger coins have been around for a while. I think we're seeing a lot of interest in them. Because they've been around for a while. They've survived multiple cycles. They're still here. XRP obviously with the SEC lawsuit being settled didn't hurt their case, right? And we're seeing obviously a lot of institutionals looking towards it and looking towards similar coins that provide kind of a stable place to park their money, at least for the time being. ADA has really taken off on the DeFi side, right? I think people are really waking up to just a lot of like the practical uses that you can use for it. There's new tools on it, like privacy layer, Midnight, Hydra, and there's just again like the regulatory side. ADA is very close with, I think, the current administration as well. So there are some, I think, interesting things that they're working on behind the scenes that might be driving a lot of these institutions, right? Typically, when we see the smart money move into these coins or move in a certain direction, they might know something that we don't potentially, right? Or they might hear something. So, I think there's a lot of that going on, right? And obviously, the holders that have been involved in Solana since its run up from like $20 last year, that have made substantial gains on Solana and substantial gains on ETH, they're looking at other areas, right? XRP's tripled, right? In the past 12 months, it's doing incredibly well. ADA is doing incredibly well, right? So I'd say, I mean, it's just it's spreading out their bets and looking at other areas that still have room to go, right? Just because Bitcoin is just such a behemoth and the amount of the market that it sucks up the liquidity, right? They are looking at other areas that can, still 5x their market cap, right? Still 10x their market cap. Personally, from my side, if I'm looking at coins to invest in, I will shy away from, a top 2, top 3 coin, right? Unless I'm playing with leverage and doing something on that side, just because I want to make some decent ROIs, right? So some of these larger dino coins, yes, while they may not be the sexiest coins on the street walking by, they still have a lot of market cap to go, right? So just looking at it from that point of view, fully diluted market cap, there's still 5-10x's across the board with some of these coins. So I think we're seeing that happen.
XRP's been making moves, making acquisitions, launching treasury company. Yeah, they're active. Like they're in the game, man.
What about Everstake? Everstake's certainly in the game. What's on the horizon for you guys? I don't know, next few months beyond you already shared a couple of products you guys are launching, things like that. But what else can we expect from you guys?
Yeah, I don't know how much I can say here, guys. You're putting me on the spot. We have interesting things happening in the works, right? I think you'll hear about it very soon once the marketing team is ready to move forward. But all I'm going to say is that I think it'll be a pivotal moment for the market, right? It'll be an interesting moment for the market as far as, you know, what it means to be a validator, right? In operating in the U.S., right, and kind of working in conjunction with the U.S. market. So we have a lot of really interesting things coming on that side. You know, Q4 that we'll probably announce relatively soon. We obviously have the stablecoin product. We have the STETH product, and then we're working on something on, you know, the Bitcoin side. That'll be very interesting, right? I think the Bitcoin code has been a little bit tough to crack on the yield side of things, to give a juicy enough yield, right? Where people are really willing to move that substantial amount of Bitcoin over. So I think we might have cracked the code, and we'll be here and we'll be releasing some info on that relatively soon. So until then, stay tuned, and I'll let you know.
All right. Yeah, cracking the Bitcoin code. That's a good one. That sounds exciting for sure. And it, you know, everything we discussed today on the show, it does seem like the whole market and the industry is at a very particular like tipping point almost. And I think you guys might be poised to capitalize on it, and that's certainly very exciting. So thank you for coming on and sharing with us, Jordan.
Thanks so much for having me, Stefano. I really appreciate it. Nice meeting you, Daniel. Nice meeting you, Darren.
Likewise.
The last time we chat, and yeah, it's been an absolute pleasure, gents. Appreciate it.
Pleasure, man.
Yep.
Likewise.
Thank you, and thank you to the audience.
Yeah, also exactly. I also want to extend our thanks to the audience. Thank you guys for tuning in. This was Market Cap, where funds, firms, and other industry organizations provide their insights on the latest market developments to you, our audience of institutional investors and traders, as well as other industry professionals. For daily updates on current events, you can join our Daily Intel Telegram channel. It's the link's in the bio. Or you can join our next show, of course. We're live every Thursday at 10 a.m. Eastern Time on X and YouTube. See you on the next Market Cap. Thank you.
Thank you, guys.
Peace.
Thank you.